Hi, I'm Josh Duvall, certified financial planner, chartered tax consultant from Duvall Wealth and Tax Planning. I hope you're doing well. Tax season is finally behind us, but that means it's time to do some preemptive tax planning for the rest of 2025. If you are an ongoing financial planning and tax client, you did receive your 2024 tax planning report. If your 2024 taxes are done, you should have received that report last week. Miranda should have sent that to you. So if you do not have it, please let me know. But I wanted to take a minute to go through that report, explain how it looks a little bit different than years past, and also talk about the observation section and some of the things that we could potentially look at doing as we look to implement tax strategies through the rest of the year. So I'm going to go ahead and share my screen and walk you through an example of what that looks like. This is the 2024 tax report. You're going to see your key figure section here at the top. This is really just the top line overview of the tax return. So total income, adjusted gross income, deductions. This is kind of the key point. What was your total taxable income and how much total federal tax did you pay? What marginal tax rate did that put you in? And what amount of your income is separated into gains or dividends, other things that might be being taxed as well. So a breakdown of your overall income. Now, for most ordinary employees that have W-2 income, the vast majority of your income comes from your W-2. It's going to be largely ordinary income, right? But you might have some additional Medicare tax depending on how much above your the $250,000 mark you are. As well as what your long-term gains, qualified dividends, or your net investment income tax might look like. Again, these are things that come off of investment income, interest from savings like CDs or high yield savings accounts, as well as interest could come from a brokerage account if you have like a cash reserve account. Long-term gains and qualified dividends is going to be capital gains, right? Short-term gains, short-term capital gains are taxed as ordinary income. So depending on what your specific situation is, you might have a significant amount of ordinary income, even though some of that might be short-term capital gains. This is a breakdown of your marginal tax bracket, so exactly where your income falls based on how it waterfalls over those brackets. So again, we have a progressive income tax system. As you fill up each individual bracket, you get moved into the next highest bracket. For this specific report, they are stuck in the 32%. So that just gives you an idea of how much of your income is being taxed and what amount of tax are you paying at each individual level. This is a breakdown of the long-term gains and qualified dividends. Again, that uses the capital gains tax rate, which is more favorable. Almost everybody except for the very highest income earners are going to be maxing out at 15%. Again, if you're above that 583 taxable income number, you're going to be paying 20%. Much more favorable, by the way, than 35 or 37%. So we could talk about strategies related to long-term gains. Schedule A, so this is going to be a breakdown of usually state taxes, which is going to get capped at 10,000, and then your mortgage interest. There might be some charitable giving, there might be some other itemized deductions. Very few people are utilizing the medical expenses because of the 7.5% AGI floor. But again, this will give you a breakdown of what your itemized deductions look like. We already talked a little bit about Schedule D, capital gains, capital losses. If you have any carried forwards, those are all going to be displayed here. This is a breakdown of sort of tax efficiency of your investment income. So for investment specific returns where you have a significant amount of short and long-term gains, tax exempt, this would be like municipal bonds versus taxable bonds or interest that you're earning, as well as dividends. Net investment income. So this is the added tax for folks that are making married couples above 250, where 3.8% additional tax on investment income. Again, this does not apply to anything that's tax deferred. So Roth IRAs, traditional IRAs, SEP IRAs, 401ks, 403bs, you're not going to pay net investment income tax. This is only on realized income that comes from investments. There is an additional tax there, as well as your Medicare tax for ordinary income, W-2 wages above 250. This is kind of where we start getting into the planning considerations. For high income people, you're going to pretty much be phased out of most of these. You might still get a child tax credit, but you're going to be phased out of a lot of these. We're going to have to get more creative than just the straightforward things. So as we go through a breakdown of the overall observations, which is kind of where we're getting at, this is where you start to see those specific items for your return. So maybe it's taking a look at where you're at with safe harbor to make sure you're not paying a penalty. Maybe it's taking a look at potential items like a backdoor Roth strategy, like utilizing your HSA contributions as a tax shelter. Taking a look at any of the employer retirement benefits where you might have pre-tax options or mega backdoor Roth after tax conversions. All of these items in your observation section are going to be specific things related to your tax return that we should think about implementing. Just because they're here doesn't mean that you're going to do them. Again, they're state returns as well. Most of my clients are in New Jersey. I'm in New Jersey, but I have clients across the country. So this should be specific to where your main state of residence return was, which again might change, obviously, if you're moving from one state to another. But these are the items that we really want to focus on. So we want to get an idea of what does your overall tax picture look like? How did you change your situation for taxes in tax year 2024? What does that potentially mean for tax year 2025? And what are those specific items that we should plan for and look to implement before the end of the year? As we're recording this video, it's May. That gives you more than 6 months to implement these items, and those are the things that I want to work on you with. If you're someone who's not a client who's getting this video because you saw it on the website or you're a part of the email list, this is the type of planning work that we do for clients who are looking for specific tax planning strategies. This is a very basic sort of starter level idea because if you have small business income, that's 1099, S Corp, partnership income. If you have real estate income from rental properties, commercial or residential, there is a ever expanding world of tax planning strategies that we could look to implement based on all the specifics that you have going on. This is just a general overview of the conversation starting point, which is that tax planning report. Again, that was shared with all of our ongoing clients. If it's something that you'd like to talk more about, please feel free to book a meeting or shoot me an email, josh@duvallplanning.com. If you are not a client and this is the type of work that you want someone to help you with, feel free to reach out for that 15-minute introductory meeting. Again, you can do all of that on the website, duvallplanning.com, or shoot me an email directly, josh@duvallplanning.com. Thank you so much. Hope you have a great day. Bye-bye.